Good morning. This is Andrew Wilkinson. Welcome to today's IBKR podcast. I'm your host, and I'm joined today by Max Chen, a partner and portfolio manager at Etna Capital in Hong Kong, and Derek Yan, CFA, who's a senior investment strategist at KraneShares. Welcome, Max. How are you?
Good. How are you?
Doing well, thank you. And Derek, how are you? It's been a while.
Thank you. Yeah, it's great. Thanks for having me.
We're going to be talking all about artificial intelligence and some of the companies within the sector. So let's start with you, Derek. Can you introduce the idea behind investing in both public and private artificial intelligence companies when it comes to investing in a single portfolio?
Sure. Yeah. When we look at AI is probably the biggest investment opportunity for the next coming decades. But when we look at the marketplace, a lot of investment is really like in a traditional way to invest in AI. But there's two problems. One, a lot of investment is not really situation aware. They're not really at the forefront of investing in the foundational models. So this industry is so dynamic and evolving. So they don't know what is the latest like model capability that's going to transfer a lot of business model. So that create a problem. The second problem is the most critical and important companies in AI is actually private, like Anthropic and like XAI. Those foundational model companies are so critical that is driving this value chain. So when at KraneShares, when we trying to invest in AI, we want to create a solution that's really solving those two problems. Partner with Etna Capital, which is really a team founded by AI native researchers, and also putting public and private exposure in a single portfolio that can capture the whole value chain of AI. So that's like the solutions we're trying to provide.
So Max, when investing in private AI companies, how do you get access and why does it matter for investors?
Yeah, we have been a private investor for so long, and we know the private investment world quite well. And the fund actually sits directly on the capital of those private companies, meaning the ETF being the direct shareholder of those assets. So the structure matters a lot for two reasons. One is trying to avoid the multiple layers of fees, because when you are on the market, you will be introduced a lot of the private access opportunities by brokers. But if you dive deeper, you'll find there are multiple layers embedded into those kind of structures. Not only the management fee, but also the carried interest, which will eventually compromise the investment return for the clients. And second, the structure allows us to have the transparency on the ownership. And also it has the ability to allow us to build a long-term relationship with the company. For example, if Anthropic or some of the other private companies grow even larger, we certainly want to keep supporting them until IPO. And that is the market weighting strategy that have been used by a lot of the incumbent ETFs, that you will double down on the winner. And it's only possible when you are on the cap table of a private company.
Derek, what's the mechanism for a portfolio manager when including private exposure? How is liquidity for investors maintained?
Yeah, so at KraneShares, we manage ETF. So ETF provides intraday liquidity actually, or at least daily liquidity for the NAV. So in a portfolio with both public and private, ETF end of the day is actually a 40 Act fund. So in the US, SEC require any 40 Act fund to hold less than 15% of private exposure. So at KraneShares, our fund target to invest about 10% in the private. So that's not a majority of the fund, but it's like a decent allocation into the private. Second thing, like any mutual fund, we have a fair value committee to really have a fair value for those private exposure. So we can calculate our daily net asset value, so daily NAV, and investor can trade the portfolio, trade the ETF around NAV. So that providing a daily liquidity for investor to get access to the private exposure.
Max, Derek mentioned earlier that AI is probably a huge investment opportunity over the next decade. What's your outlook for the AI industry and where's it heading right now?
Yeah, I think I would say the future is here, but it's unevenly distributed. So we are still at the preparation stage for this AI wave, and we are still early. For example, the data center is not ready. There are massive build outs in the space, and also the data is not ready. The enterprises are not ready to prepare their data for the AI to digest and to produce or transform those capabilities into actual business operations. So for some sectors in the private sector, I think there are some hype around the private sector companies, especially you see some of the coding agents companies have already proved themselves to be the PMF, but I would say they lack the business product market fit, which means they're operating at a negative 200, 300% gross margin and subsidizing the model companies such as OpenAI or Anthropic while burning investor money. That's the area that we will definitely be cautious of investing. But for some sectors, I think it's still undervalued and we are still at a preparation stage. I think for a lot of the AI companies who has the AI capability, but also understand deeply about a certain industry, the way that they could implement the technology into a lot of the enterprises will be valued a lot more than some of the startups that we have seen in the space right now.
Derek, the performance of AI companies has been very strong recently. Should investors be concerned about the AI market?
Well, a lot of people say AI is a theme, it's a bubble, it's like a circle, right? But we really see like AI is a structural growth compared to a lot of like theme that's short term. Because like in the past, there's several structural growth, right? Like PC era, you have internet, then it's cloud and SaaS. Just look at the past 10 years, cloud and SaaS is really transforming the enterprise software industry that creates this like decade-long performance change. Those companies are really leading the broad benchmark performance. So we see AI has the potential to be the next wave of technology breakthrough. So this structural growth is really, I think, decade long. And we are now only at kind of like third year, right? Think about how everybody start to know ChatGPT about 3 years ago. So we're still early and it's so dynamic. So that's why I think investors and global like investment community should be aware of this transforming structural growth.
So let's talk about two things now, the risk and returns of investing in AI companies and also integration of both public and private. So Max, let's start with you. How do you assess the risk and return?
Yeah, I think for some of the private AI companies, especially the model companies, some of the strongest growth companies that we have ever seen, right? Because they are the infrastructure of the automated society that we are going to build. And they will certainly deliver the investment returns for the investors around those model companies because they are the beachhead of the revolution. If you look at OpenAI today, they are already a 300 billion valuation company. It's larger than some of the public companies already, right? So from portfolio construction perspective, not including those private exposure would be an underrepresentation of the AI beta. So I think the competition is still uncertain. It's too early to call that the private will disrupt the public, given the data, the workflow integration, and the capital, the access of the capital that the public companies has. But I would think this is a new race. It's a fair race. It's a race on execution speed. So we'll keep betting on the AI winners, no matter it's a public or a private company.
And Derek, the challenges of managing an investment, integrating both public and private companies into one product. How do you get around that?
Yeah, like we're like one of the first company doing that, right, in the ETF industry. So we do get a lot of questions, come like misunderstanding from investors. What does it mean? Well, like a lot of people just like, they didn't realize what we're doing actually. So I think that's the biggest challenge is just first is investor communication and education, because nobody's doing that previously, putting private companies such as Anthropic and XAI into an ETF, right? People think ETF should be just index tracking public equity. So those are really traditional ETF. So what we do is a lot of nuances. Like I said, there's like a exposure management. We want to manage the portfolio in a way so we have a dedicated, targeted weight into the private. So which means we have to maintain a strong pipeline to keep adding new names if there's new money coming in. The second thing is how do we really fair value the thing? So investors get a fair NAV. So that's why we partner with a lot of like third-party vendors. So you look at like private company. They're private for a reason. So because they're not traded publicly, so they don't have like daily price. But actually, because we are investing in a lot of late stage company, this late stage technology company actually now has a decent secondary market. So with the help of a lot of vendors, we get access to a lot of secondary transaction prices. So based on the last primary round, the secondary transaction prices, all those data information is very valuable for the fair value committee to have a fair value for those private companies, even they're not public. So with all those nuances, we were trying to create a solution that's really adding the private into an ETF. Actually, now investors can get access, that any investors can get access to those companies. We are the ETF.
Max, within the AI sector, are there specific industries that are at the vanguard of innovation? And how does a portfolio manager aim to capitalize on those industries?
Yeah, sure. I think right now, a lot of the attention around model companies, because there's a saying that learning is always faster than feature engineering. So the model can overwhelm a lot of the startups, no matter which vertical sector that you are. So if you give the model enough data to learn, so that means the model investment is not finished yet. So we already have access to Anthropic XAI, and we are thinking about adding more model companies, including the sovereign AI in different regions, to fully capitalize on the momentum. And we are also at a stage of scaling data, no matter through building an RL environment to synthetic data or through deploying those AI models or tools into a real world workflow. So we want to focus more on the service-led growth companies in different verticals, finding the AI native talent here that can customize the technology to systematically embed themselves into enterprise workflow. And we do have strong belief that the killer app eventually will be robotics. So we will focus more on areas like robotic foundation model companies down the road.
Derek, things are moving at quite a pace within the artificial intelligence industry. How on earth does an investor stay on top of emerging technologies and the latest trends?
Yeah, I think the most important thing first, investors should just use it, right? If you don't use it, you don't realize how disruptive the technology is. A lot of people already know like ChatGPT, use ChatGPT to really write email or doing like some research, but there's more tools actually available. Like if anyone, I think like now coding is the most important technology for AI. So anyone who don't know coding at all, actually, you can actually start learning like called vibe coding, right? So just there's a lot of tools, actually like Anthropic and Claude coding is one of the important coding, like AI coding technology that's available. So anyone can actually learn to code and build their own app. So that's a game changer, I think, for a lot of investors going forward to really have their own AI agent to really help them automate a lot of workflow for their investment process. So then like with that, and you can build all the information around you, you can create like a lot of daily notice of what's happening in the AI world. And of course, investor can follow KraneShares.com like to get the latest information. We're going to write about AI. We have already done a lot of research article to how to invest in AI, both in the public and the private space. And partnering with Etna Capital, we're going to provide more insight for like white paper and knowledge sharing through our platform as well.
Derek Yan, CFA, is a senior investment strategist at KraneShares. Thank you so much for joining me, Derek.
Thank you for having me.
And Max Chen is a partner and portfolio manager at Etna Capital in Hong Kong. Thank you for joining me.
Thank you as well.
And thanks to the audience for taking time out of your day to listen to today's episode. You can see more from KraneShares.com, and you'll also see some of the videos and articles that they put out on Traders Insight at the IBKR campus. Don't forget to subscribe wherever you download your podcasts from. Bye for now.
The analysis in this material is provided for information only and is not and should not be construed as an offer to sell or the solicitation of an offer to buy any security. To the extent that this material discusses general market activity, industry, or sector trends, or other broad-based economic or political conditions, it should not be construed as research or investment advice. To the extent that it includes references to specific securities, commodities, currencies, or other instruments, Those references do not constitute a recommendation by IBKR to buy, sell or hold such investments. This material does not and is not intended to take into account the particular financial conditions, investment objectives or requirements of individual customers. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice. Any discussion or mention of an ETF is not to be construed as recommendation, promotion or solicitation. All investors should review and consider associated investment risks, charges and expenses of the investment company or fund prior to investing. Before acting on this material, you should consider whether it is suitable for your particular circumstances and, as necessary, seek professional advice.